Global stocks are up across the board following the release of better than expected data out of the U.S. Consumer prices in the world's largest economy rose 8.5% in July. That's down from the previous month's increase of more than 9%, which was the highest in 4 decades. U.S. markets have jumped on the news, with all main indices climbing after the rally overnight. And good news travels fast, because in Asia, shares in Shanghai have risen 1.5%. Stocks in Hong Kong are also up more than 2%. Now let's hear from U.S. President Joe Biden, who was understandably happy with the report.
We're seeing a stronger labor market where jobs are booming and Americans are working, and we're seeing some signs that inflation may be beginning to moderate. Our work is far from over, but 2 things should be clear. First, the economic plan is working, and second is building an economy that will reward work.
Now for more, let's hear from Naeem Aslam, Chief Market Analyst at AvaTrade in London. He gave us his take on the prospects for the U.S. economy.
I think when it comes to traders, the view is the U.S. should get its house in order in relation to its geopolitical policies. Because on one hand, you have these tensions which are very much anchoring up with China because of Pelosi's visit to Taiwan, and that is something traders are very much paying attention to. So the optimism that the Biden was really representing, traders believe that, okay, look, we already know that what the data is telling us. The data is telling us that the U.S. labor market is holding up, but at the same time, we have learned from the earnings season that the companies are freezing the process of hiring, and then headcounts are being reduced, right? So we will see those numbers becoming softer or coming at a much softer level in the coming days. But on the inflation side, again, it was very much clear from investors' perspective that inflation is going to tick lower. Why? Because the main factor which was very much fueling inflation, i.e. oil prices, they started to come down from $136. Now we are talking about under $90. Or perhaps where we see the prices moving is $70 to $75. So inflation will be coming down, but not massively. The path for the future guidance in terms of inflation or the future path is going to be quite difficult. So the Federal Reserve will still continue to increase interest rate. We still see the interest rates going to 4.4% by next year or so. But yes, the pace of massive increase in terms of interest rate will slow down. So to answer your question precisely, we need from Biden administration or from the U.S. as an investor's perspective is to have less geopolitical tension, not anchoring geopolitical tensions. That's what he needs to assure to investors.